All right. So, Mike, one thing I was thinking about this morning was that right now I'm looking at the Dow. It is down 1,200 points as of 10:30 or 12, 10:23 a.m. And I wonder for the people who may be looking at their 401ks and going, whoa, what's going on, especially with how this war is unfolding, what should they know? Because I'm sure the panic might set in for some people.
Well, obviously, it's going down because of the actions in the against Iran by the U.S. and Israel. Oil prices have taken a spike, and of course, oil prices feed into energy prices. So there's a potential there if we continue to see jumps in oil prices. We could see the economy slow down quite a bit because we run on energy. This has happened many, many times before. This is an uncertain event. My advice, this is just my advice, but I think you'll hear a lot of investment experts say the same thing is not do anything because we don't know what's going to happen. I mean, if you sold now and things wrap up by the weekend and the Dow takes a big jump, then you've got to buy back maybe potentially at a higher price than what you had before. So I think it's just a matter of realizing these are risks that investors take. These are risks that, of course, the entire country is taking because of this affects pretty much everyone. It's impossible to predict. I would say don't even watch the news, at least on this. Don't even look at the investment market.
And when some people also say that when it comes to like investing, when the market takes a tumble like this, there may be an opportunity to buy up some stocks that might be lower, so that if it does bounce back, you're kind of, I mean, in the short term, yes, it's like it's going to be a significant jump, but then you have at least getting in at a lower price. Should people consider maybe buying up some stocks they've been thinking
I,
about?
I think if you're a person who devotes a lot of time to the stock market, yes, that's a possibility. I think for most people, my advice is to not try to play the market, to have a strategy for investing in a diverse group of stocks, a diverse group of investments. Mutual funds are very good for that. Have a regular set amount that you feed into it and pretty much ignore it after that. I mean, to a lot of people, probably that sounds stupid that you should watch, but the stock market is just, I mean, the great Professor Milton Friedman, when asked, what's going to be what is your prediction for the stock market for the next year? And he said, it'll fluctuate. And that's true. I mean, this is a person who won a Nobel Prize in economics. So I think that people should not use this to make any large moves in their investment portfolio. Maybe some small ones, but I would not recommend any large moves in their investment portfolio. Don't worry, this is something that anyone can't control. And in the long run, you'll be okay in terms of your investments. Now, the one group that may pay more attention to this would be the group of people who were building up, let's say, investments for their retirement, and they're on the verge of retiring, and they want to start drawing down that money. That is the group I think that this is more pertinent to. I don't have any special advice for them, but I think that's the group, obviously, that this is more pertinent to, where you are on the potential end of tapping that money. But if you're in the middle of your build up for your retirement, or even if you're just even a couple of years away, I would say do nothing.
And right now, another president was talking about, they early projections 4 to 5 weeks for this
Mhm.
conflict lasting. But he also said the United States is equipped to last longer. Even Iran's leadership saying that they're prepared for a long war. Let's say fast forward like a year, maybe even two, kind of what the whole Ukraine-Russia situation turned out to be, longer than anticipated. What then should people consider if it's like long, like when's the point where people should finally go, okay, maybe I should try a different strategy?
You mean if this thing goes on for a couple of years and we're 2 years out, whether people should, well, by that time, I think the markets would have adjusted. If this war goes on for 2 years, let's say, the world will find ways to replace Iranian oil. And so I would expect that that length of time, we would see oil prices probably fall back to a more normal level. So I think that's a long, if this drags on for that long a period of time, markets, investors, businesses will find ways around it. So we won't be in the situation right now where this is all taking us by surprise, and we're seeing these big jumps, for example, in oil prices. 2 years, this drags on for 2 more years. The world would find, and the U.S. would find a way around to replace that Iranian oil. even if it needs replacing. By that time, we may be other countries, the Saudis, et cetera, may be controlling the production of Iranian oil. I think I read that the Strait of Hormuz is now open, and that's a big plus for keeping the oil flowing out of several countries.
Well, part of me also wonders what Venezuela is going to have to play a role in all this. I know because the United States taking control of like their oil production over there, if that ends up being something, I don't know. But that's a different thing entirely. I was thinking about this as well. A lot of people who obviously are putting away toward retirement in their 401ks, et cetera. Is there any kind of like physical asset that like the average person should also invest in at all? I mean, I've seen this. I see people actually buying up gold bricks and stuff like that. I don't know. Like, is there anything that people should consider outside of just their 401k, Roth IRA, et cetera?
Well, I recommend that even without if this hadn't happened at all, just in terms of a investment strategy for retirement, that the average person have their investments spread across all the major assets, including precious metals, foreign stocks, domestic stocks, bonds, et cetera, money market funds, which are very, very safe. That's the strategy that I use because I'm not smart enough to know what's going to do well and what's not going to do well. So I've spread my retirement money across many different types of investment possibilities, including precious metals. So I think yes, gold and silver should be part even before all this started. This should normally be part of your investment portfolio. They should be.
Anything else you wanted to say that I didn't already ask you about? Maybe concerns that you have regarding this conflict and the global economic implications that it has?
Well, of course, this mainly goes into geopolitical implications, not necessarily economic. But of course, I think in terms of the economy, we do worry about the Middle East as a major source of oil. It looks as if the other countries, the Saudis, the Kuwaitis, et cetera, are casting in a lot with us, and then, of course, they're major sources of oil. So I would expect that oil markets will settle down, even if this war goes on for longer than what the president hopes it will. I would imagine that the oil market will settle down as long as we are protecting, and it looks like we are, those other major countries that are oil producers.
Well, Mike, I appreciate you making time to chat. If you have any other thoughts you have, you got my email address. Feel free to send whatever thoughts you have.
Thank you, Chris.
All right, you
Good to
take care.
talk.